The next PCE inflation report is about to come out, and this will heavily determine what the Federal Reserve is going to do at their September meeting. Because remember, right now, the Federal Reserve is basically stuck between a rock and a hard place. What is it? Out of the fire into the frying pan. Any of those sayings kind of describe the situation the Federal Reserve is going through right now. So we're going to discuss that. Then we're going to discuss why this PC inflation report is going to be so important. So without further ado, as always, my name is Derek. I got my degree in finance, so you don't have to. Let's dive right in. So first and foremost, what is the PCE report and how does it compare to the CPI inflation report? Because everybody talks about the CPI inflation report, which is the consumer price index. The government talks about it, news media talks about it. The fact, though, is that the Federal Reserve, they care much more about the PCE report. So really it comes down to how these things are weighted. And I will put a graph on screen right now to show you the difference. But the PCE, which is the personal consumption expenditures, seems to be, at least according to the Fed, a little bit better at tracking real inflation. And then, of course, there's the core metric on top of that. Okay, so really the easiest way I would describe it is that CPI focuses a lot more, puts a lot more emphasis on housing, where PCE puts a lot more emphasis on healthcare. Both are very important to the average person. The other thing is CPI focuses on the urban consumer, whereas PCE focuses more on a well-rounded consumer. So basically, CPI won't include things that a rural consumer might purchase. And then the other major one is that PCE takes into account potential other options. So if something gets more expensive, PCE will take into account consumer behavior, where CPI doesn't change unless it's manually changed. PCE is also updated more frequently. Okay, so now you know the difference. So now what is the situation the Federal Reserve finds itself in right now? Well, as you know, and as I've talked about in previous videos, if you watch this channel, first, the CPI first, they didn't cut interest rates at their last meeting. Then the CPI inflation report came out, which was actually decent, which made their decision not to cut interest rates look terrible. Okay. Then the PPI inflation report came out, which is the producer price index. I know there's so many. The producer price index came out, which was horrible. It was like 3 times higher than expected. It's like 0.9%. And I think it was expected to be like 0.2%. And then the core metric was just as bad, 0.9%. The PPI, the producer price index, basically what this tracks is what domestic producers, not what they pay, but what they charge for their output. Now, the reason why people are now saying, well, that means tariffs are actually showing themselves is because domestic producers have to purchase things that might be tariffed, like raw materials. And because of that, of course, they're going to raise prices because they're being charged more on their cost. So the PPI went through the roof. So now you got CPI looking good, PPI looking terrible, and the Federal Reserve is looking like, what do we do? Do we cut interest rates? Most people think that they're going to cut interest rates. If you look at the CME Fed Watch tool, which I encourage you to do, it's free, it's online, it still shows a very high odds that they're going to cut interest rates at their September meeting. That's where the PCE comes in. This is going to solidify either their decision to cut interest rates or it's going to throw a wrench in everything and they're going to maybe reconsider. The PCE is what the Federal Reserve cares about, and they care more about the core metric. Okay, the core metric across all of them. So across the PPI, the CPI, or the PCE, the core metric removes volatile assets, okay? Usually food and energy prices. The reason why it removes this is because these things are volatile for other things, seasonal changes, all kinds of other things. So when the Federal Reserve is looking at these metrics, they care about core. Now, they care about PCE core inflation most. So that's the number to look at, okay? My puppy just barked. If PC core inflation increases more than expected, I would think that the Federal Reserve, including Jerome Powell, who is obviously leading the Federal Reserve, is going to look heavily at maybe not cutting interest rates for one more time. Now, if you ask me for just my general opinion, I think that right now, based on everything that I see, the more likely odds is that they're going to cut interest rates at their September meeting. Again, if you watch this channel, you know that I myself have said for some time that it's time to start cutting interest rates at least a little bit. And this has to do with what's known as R star, or the neutral rate of interest, basically a level a theoretical level that basically economists and the Federal Reserve have to find, basically, that at that level, you would stabilize prices at whatever inflation rate is currently there, and you'd have maximum employment. We are still above R star. So in my opinion, we could cut a quarter point and still be above R star or the neutral rate of interest, which means that we would still, even after a cut, have a positive inflation fighting effect and a slight negative effect on the job market. That's the other thing I forgot to mention. The jobs market was horrible. That's really what made the Federal Reserve's decision look horrible, is that the jobs market data was horrible. So you have bad jobs market, good CPI, bad PPI, and then we'll see what PCE is. So because I think we're still above the neutral rate of interest, I do think that they're most likely going to cut interest rates here. But if we get a PCE report that is just horrible, especially on the core metric that either is higher than analysts' expectations or something other, like if it shoots above 3%, something like that, the Federal Reserve may consider holding off one more time. Remember, you're already getting dissent inside the Federal Reserve. So you had two Federal Reserve governors, Michelle Bowman and Christopher Waller, who, yes, there is some political motivation behind that. They might lead head the Federal Reserve next because of Trump. So yes, there is some political motivation. With that said, it is the first time in 30 years that two Federal Reserve members have dissented when it comes to the consensus agreement, which means that they voted to lower interest rates when everybody else voted to keep them the same. They dissented. They went against the regular the decision of everybody else. This is the first time in 30 years, which means that there is a growing battle inside the Federal Reserve of whether to cut interest rates or not. So we'll have to wait and see. I don't want to drag this video out for no reason. I just wanted to give you an update on how important the PCE inflation report is, which is about to come out at the end of this month. So it comes out at the end of August, and then in September, we have the next Federal Reserve meeting, and they are absolutely going to look at this because this is their preferred metric to figure out what to do. So to wrap this up one more time, you had a horrible jobs report, which I've talked about before. You had a decent CPI inflation report, which when you put those together, makes the Federal Reserve, makes them not lowering interest rates last meeting seem like a bad idea, right? But then you had the PPI inflation report, which is like, oh my God, maybe tariffs are actually showing up. So what's the fourth one? It's going to be the PCE, and it'll kind of be will it either tie everything up, make too good, too bad, or will it further solidify the Federal Reserve's decision to cut interest rates, their FFR, their federal funds rate, in September? We have to wait and see. It comes out in just a few days, like a week and a half or so, and then the Federal Reserve meeting is next month. With that said, I hope this video was informative. If it was, please consider subscribing. It helps the channel out tremendously. It's difficult to grow here on YouTube, but I love this stuff. It's been my field of expertise for over a decade, is where my formal education is, and I love sharing that with you guys. So every subscription matters, and it means the world to me. With that said, I hope you have a fantastic rest of your day, and I will see you in the next video. Take care.